What is going on, everybody? Back again. Time to take a look at Uber, ticker symbol. Well, Uber, this stock was up 4.5% today, and we see right after reporting earnings, the stock is trading off about 5%. We'll see how it bounces around in the after hours when management gets on a conference call. We'll jump into some of the high-level numbers here. We'll talk about, how many people are taking an Uber. I've actually tried to get an Uber, and it's actually hard to get. I think they're all on that $600 boost unemployment right now, because I can barely, if I need an Uber, it's hard. They're actually pretty hard to get. So we'll talk about that. We'll talk about UberEats. That definitely performed very well in the quarter. Then we'll jump more little high level earnings and revenues and profits. They're not going to be any profits here, but we'll talk about that. We'll talk about the acquisition that they made as well. And then finally, we'll jump in the stock chart. I think you can learn a lot from this stock chart. There's a lot of people that leave comments on my channel, like, talking about buying before earnings, and there's a reason why I only talk about stocks after they come out with earnings. And I think Uber's setup today is a perfect illustration. If you want to go gamble, go to Las Vegas. Don't buy a stock before earnings. It's just, you're basically gambling. You can go get a hotel in Vegas and find a table for a real cheap amount. I wouldn't do it in the stock market right now. It's just not worth it. So we see here, again, the stock traded up. We're seeing the stock bounce around pretty nicely here in the after hours as well. We'll see how that holds up. This is a $60 billion company. So this is a company with a massive valuation. When we jump into the revenues and things like that, you're really going to see that. Now, they did an acquisition earlier. They tried to buy, I can't remember if it was DoorDash or one of those. Well, they couldn't get it, so they've settled for Postmates for $2.65 billion. Now, unfortunately, if you're a shareholder of Uber, they issued 84 million shares of common stock for 100%. So they basically just issued shares to buy this. And so they gave a 10% premium on Postmates. But this does, actually, I think the space needs this. So Grubhub, DoorDash, Postmates, there's a couple other ones out there, obviously UberEats as well. This space needs consolidation, because you just can't have this, in my opinion, you can't have this many delivery companies and expect any of them to actually make a profit. I think you need some consolidation. Let maybe two companies kind of be the players in there, and then maybe you start seeing these delivery giants start to bring in the profits. Now, high level stuff here. We got trips down big. Look at this, 56%. Monthly active platform users down 44%. Some of this I think is going to be permanent, guys, because if you look at what's going on in San Francisco, you look at what's going on in New York, you look at what's going on in the big cities, what is happening right now? People are leaving. They're telecommuting. They're not just leaving, they're leaving for good. Okay. I live 100 miles out from San Francisco. The real estate market where I live is on fire, and it's ice cold. I know real estate investors in the San Francisco market. They are dying to come to my area because it's red hot, and San Francisco is absolutely chilly, like freezing cold, and New York might be even colder. People are fleeing the cities where Uber gets the most of their business from. So I actually would be concerned about that as an Uber shareholder, is that people are moving out of the cities. They're moving into more affordable areas. Part of the reasons why you don't have a car in the city is because you're paying $3,000 rent. You probably have to pay I know friends that live in LA and San Francisco that pay like a couple $100s a month just to park their car. Okay, not for rent, to park their car. And so, yeah, having an Uber is far more economical, but that's not going to happen anymore. At least I think it's going to happen to a lesser extent. So we have gross bookings down 35%. We have GAAP revenue down. Everything is down. Let's take a look. What wasn't down, though, is this is delivery. This is essentially Uber Eats. And so we went from let's see, this is in millions. So wow, 3.3 billion all the way up to 7 billion. So that's really nice. That's really, really nice growth. 100%, obviously, I say really nice growth. 106% is nice growth. Doesn't matter what you're counting there. Mobility, though, down 75%. And so we see, man, it went from 12 billion down to 3 billion. So this little 3 billion bump was nowhere close to filling in this gap here. So Uber really I think their delivery business, I don't know if it's going to keep growing at 100% quarter over quarter, year over year. I doubt that. But I think the mobility will come back to a certain degree, but will it, how long, and will it come back to this $12.2 billion number? If people are leaving these cities, if there's, Google and Facebook and Microsoft and all these companies don't have employees required to live in these large cities where you pretty much, I don't want to say you have to take an Uber, but it's very, a much more economical thing to do. Will this mobility number bounce back? How long will it take? Will it take a year, 2 years, 3 years? Will it ever come back? I think those are good questions to ask, but I think you will see an uptick in delivery. I fully anticipate this number to keep moving in the right direction. So gap revenue here, we see though, even though we grew delivery by 100%, it's still not a ton of revenue. Okay. It's actually growing pretty nicely. I'll be honest with you, 1.2 billion. That's really nice compared to the mobility of 2.3, and it obviously went down to $790 million. So we were coming off a base where we basically doubled this. So yeah, 100%, but we lost 60% of our mobility. So it's a push and pull on Uber. And how long will that push and pull last? I'll let you decide. I honestly think it's going to last a while, even after we see a recovery. I think even after we see a recovery, it might take a little bit longer just because of what's going on in the big cities like San Francisco, LA, New York, San Francisco, those types of places. So revenue on the top line here, we've got 3 months ended here, 1920. We see this is down, obviously, driven obviously by the mobility and the just your regular Uber cab ride. Went down here on a 6-month basis as well. They have tremendous loss from operation, although not, it's not as bad, which is actually good because it's showing that these companies, look at this, research and development went down huge. And so they really did a nice job at Uber, in my opinion, cutting. Look at this, general administrative went from 1.6 billion all the way down to 565. So they mega cut costs. Take a look at this. We had 8.6 billion in costs. This is in millions, right? Yep, millions. So 8.6 billion all the way down to 3.8. That's admirable because this top line didn't, it shrunk, but it's not like crazy shrinkage. So they did a nice job cutting costs here because we went from $5.5 billion loss down to 1.6. This is a company that, hey, if that mobility does come back, they can keep these costs in check. I don't know if they can. I'm assuming they might be able to. Well, then yes, they can turn a profit. I know they're trying to. I know they laid off some workers at Uber. They're really trying to streamline things. We see from a 6-month view, we went from a $6.5 billion loss down to 2.9. So this is, in general, this is positive in my opinion. Now, moving down here, what I want to show you is your diluted share count. So this does affect you, the shareholder. So we've got, take a look at we went from 1.1 billion in shares up to 1.7. I'm assuming this probably includes the Postmates acquisition. It may or may not. I don't know. I would assume that this big of a number, this is 600 million shares that they issued here. I'm assuming it does. Take a look at the last 6 months. They went from 783 million shares, basically like, what is that? 1 million shares. This is probably as written. So this is 1 million more shares of Uber are out there. Here's the last point. This is something that you can take away. This is why you almost never see me reference earnings per share. In particular, unless it has to do with a dividend, then I think you can get some value out of it. But take a look. We lost $6.2 billion in the previous period. We lost 4.7. Obviously, that's a decline. You're going to expect earnings per share to decline, or at least the loss in this case to decline. But take a look. It declined big time. Okay, more than the gap that you have here. Why? Because you're dividing this number by this number, and you're dividing this number by this number. So this earnings per share number actually looks better than it actually is because you're dividing it by a much bigger number. And so those are things that you want to keep in mind when you're looking at these earnings per share. From a cash flow perspective, it's a company that, it's not great from a cash flow perspective, although it was relatively flat year over year. That's actually surprising to me. So that's not bad at all from a financing perspective. We see proceeds from issuing public shares. So this was last year. This year we didn't do that, but we issued these senior notes here. And so that's where a lot of this cash, some of this cash came from. Finally, we come down to cash at the end of the period. Actually, it's right here. Sorry, I lost my place there. So we have cash and cash equivalents at the end of the period. We went from 13.7 down to 8. So that's, I wouldn't say that's a problem, but for 6 months period, they are burning cash through this business. And so that's something that you want to keep in mind. Let's zoom really quickly up to the balance sheet and see where we're at. Here we are at the beginning of the year. Here we are now. We went from 10.8 down to 6.7. So cash is running out of this business. And like I said, unless they, they can obviously raise more money by issuing shares and things like that, or debt if they want to do that. But this is a company that, is, I wouldn't say that they're bleeding cash, but cash is leaving the station on a company like this. And as long as that regular Uber rideshare business doesn't come back, as we see here, it's down huge, just massive, massive numbers on the number of trips taken, on the gross bookings, and all across the board. They also have some litigation out here in California that would require them to count drivers out here in California, at least, as employees. I'm sure they're going to have a workaround for that, for the drivers out here in California. There's always a loophole to every law. I'm sure Uber and Lyft will figure that out, but that is on the legislative ballot out here. Voters will have a chance to vote for it. I won't tell you how I will vote, but it's actually pretty easy for me to decide. Jumping over to the stock chart of Uber, what we saw today. So here's our candle today. The stock traded up into, I actually had these lines in before we actually had the conference call and had the earnings reports. What happened was this stock traded up into this line. And so what I was talking about in the beginning of this video is I always analyze companies after the fact. A lot of people want me to get on here and tell you 3 days before earnings what's going to happen. The reason why I don't do that is because what happened with Uber is the stock traded up to this line. If they reported good earnings, the stock would have broke this. I'm almost positive the stock traded up here with both, buyers of Uber bidding the stock up to kind of a resistance point. Sellers will come in, so the stock will stall right here. If they had a good report, boom, stock would have gone up here. I promise you. If they have a good conference call tonight, the stock will trade up into this area easily, up into the 37, 38, maybe even as high as $39 a share. If they had a bad report and if management wasn't very reassuring on the call, what was going to happen? It was going to get rejected here. And in my opinion, you have about a 50-50 chance of determining this unless you have some inside knowledge that nobody else has. And I'm guessing none of you have that. So if you want to gamble, go to Las Vegas. You can get a $40 hotel room and go play craps or roulette down in the pits. Personally, I don't like to play that game. Now what I'm dealing with is information that I know. The stock hit this head on here. It traded down. Things don't look that great to me on this stock chart because what has happened, we're basically in this range. I could probably even pull this bar up. We could probably even put the range somewhere right here. And so now, in my opinion, Uber is going to be stuck in this range until the company has more clarity on things going forward. Investors are clear that Uber Eats is growing and Uber Eats looks like a really nice addition to the business, but it's very unclear on what's going to happen with the regular Uber ride sharing business. And so in my opinion, this stock's going to just bounce around in this range. And to me, that doesn't, maybe it's a good trading opportunity. I don't know, but I don't see a trend. We had a trend intact here. As you can see here, we had a nice trend intact with this stock. It was nice intact here. And then what happened? It broke here. Once this stock broke here and then it gapped down here, now we're stuck in this range. And so the only spot where I would maybe be thinking about getting Uber shares is right down here at 29, call it even $30. Personally, I would much rather come in here down at this level. Whether or not it comes down here is up to the stock and sellers of the stock, but I'd be down here at 25. I think would be even a better spot to get it. I think you'd be getting better value down here. But this is a stock I believe is going to be stuck in this range for a little while, kind of like maybe like airline stocks, maybe some of the bank stocks, maybe some of the cruise ship stocks. They kind of had a rally. It kind of retested some highs that failed. And now we're, in my opinion, we're just going to be yo-yoing in here. And to me, that's not really an attractive spot to buy a stock and go long unless you really are really positive that things are going to turn around for this company. And on top of that, they're going to be issuing dilutive actions either through fundraising and through acquisitions, which may not be beneficial to you as a shareholder. So there's Uber for me. It's not that bad, honestly. It's not a stock. It's a stock that I would own if everything looked a little bit better, not only from the stock chart, but from the fundamentals. But right now, I think this is just a watch list stock for me. And if it trades back up into this range and you want to get out of it, I think this $35 point could be one, because if it does break this $35 point, there is some room above it, but I think for the stock to trade up above here, it's going to have need to have some really positive news to get that done. So there we go. That's Uber. Hopefully you enjoyed that one. We'll be back again very soon here on the channel. Thanks for everybody that has subscribed, liked, and commented on a video. I really appreciate it. Good luck with your investments.